Ring, ring, ring. Hello, Sims and merchants. And also you who don't like my voice.
They sound quite happy.
Welcome back to
You're out.
Krown's Magical Happy Depth Cave.
Welcome back to the Krown Crypto channel. Wishing you a happy healthy start to this nice Sunday morning over here from an island in an unknown location. Absolutely beautiful outside. Not so beautiful in the cryptocurrency landscape. It seems like every day, every few hours, every few minutes, another major piece of information comes out, which is quite damning to the overall sector. However, I wanted to go over some, I guess I'm trying to spin this as hopium here. I don't know how much hopium it's going to, or how much comfort it'll be to some people, but I do want to go over what I believe is the most likely thing to be happening in the next couple months, as well as go over the short-term time frames as well. Other than that, I want to just get actually right on into it right now, waste no more time. So first things first, I wanted to start off with the short-term time frames, of which we're looking at the same short-term time frame ranges as before. That would be about 18,500 to the upside versus about 16,250 to the downside on a 4-hour closing basis. Again, coming off of Thursday, Friday action, we were looking at volatility extremes, which was likely going to create a bounce, which I believe that we did see. It was almost 20% bounce right there. However, that would imply that this was a corrective bounce, and corrective within the context of a downtrend would imply, well, trend continuation. And in this case, we do see that there is hidden bearish divergence on the 4-hour RSI. And if we go and reference stochastic momentum on the medium and short-term timeframes, we can see that the 12-hour pivot is currently at $17,000, meaning that if Bitcoin closes below there, 12-hour momentum once again turns to the downside in the bearish control zone. 6-hour time frame is going to be loading, and my internet connection is not looking too good today. Yes, come on, baby. Come on, baby, load it up. There we go. 16,600 to be the magical number on this one, of which Bitcoin is about $100 below as of this recording. And by the way, there's 2 hours and 24 minutes left to go on that one. 4-hour time frame will also be loading, if you can see. Come on, baby. This island internet, not great. Definitely not great. Can we actually get it to load? Yes, there we go. 16,770, which Bitcoin is a few $100 below as of this moment. And the hourly is going to be down as well, below 16,700. Typically speaking, I don't really trust indicators too much over the weekend, but ultimately, you can see where those pivots align. And again, what does that essentially align with? Probably another test to the downside of the range. Do we see an actual closure below the range lows or not? That question remains to be, answered, I suspect. But there is a bit of a setup going on right here. So if there is a closure below the range lows, well, at that point, I'd be looking for this next week to open obviously lower, and we can start to talk about the next areas of interest to the downside. By the same token, and I guess for some potential short-term, medium-term hopium, if Bitcoin were to reclaim specifically the $18,500 level on a 4-hour time frame closing basis, or $18,000 on a daily closing basis, or a little bit above 18, let's say. At that point, I would say, hey, we have a nice bear trap going on right here, and Bitcoin's very likely to put in another move north of $20,000. And we can say that the short-term, medium-term downside is very likely over for the time being. It's time to try a little bit of sideways and up. It's not a call for the beginning of a next bull market or anything like that. Just short-term moves here. So now that we've gotten that out of the way, let me reference my notes really quickly. I wanted to go over the higher term time frame. So kind of putting the puzzle piece together, I do think that it is, rather relevant to say that Bitcoin probably does have one more leg lower. But there are a few things that I do think can promote some potential hope and maybe a little bit of comfort to more long-term minded people here, of which first let's go over, the weekly. The weekly RSI is showing hidden bearish divergence. Obviously, that is more or less a formality, seeing as we have the same thing on CME. That one already confirmed on Friday closure. And of course, any sort of a closure today for spot price action below the weekly pivot, which is 17,500, will confirm and very likely does propel another move to the downside in this coming week. There goes my internet yet again, but here we go. Beautiful. Yeah, just showing the CME chart right here. As it does start to populate, already obviously confirming that weekly closure and that hidden bearish divergence alongside extreme lows on weekly volatility. If we go and reference the weekly stochastic momentum, also this one is going to have some hidden bearish divergence, or not hidden bearish divergence, but is going to be crossing to the downside with any sort of a closure today at 8 p.m. Eastern time, I believe it is, now that we have daylight savings time, below 17,150. So again, if you can see Bitcoin Bitcoin essentially reclaimed the $17,000 region or so, perhaps, we can start to talk about some trap activity here. But for right now, risk still remains to the downside. Unfortunately, the question is, does Bitcoin actually break the ranges to the downside and have a continuation move sooner rather than later? So again, my line in the sand for that one is about 16,200 on at least a medium-term timeframe closing basis. And at that point, we start to, reference the next sort of areas of interest to the downside. I did say I was going to talk about some hopium. Believe me, it's coming up here soon. But I do want to talk about where the next areas of interest would be to the downside if that were to happen. So let's go over here to the 2-day time frame. This is the same chart that we've been referencing for. It's been relevant for quite some time now, basically since middle of October, and we saw it actually resolve this past week based upon that news event. And it is the 2-day CME chart. This is a volatility versus stochastic momentum signature. Volatility represented by this metric that my cursor is currently on right now. Whenever it gets to extreme lows throughout the full history of CME's existence, the expansion phase from these extreme lows has led to an average move of about 39.5% done over the course of about 3.5 weeks. And the stochastic oscillator's direction has been correct in getting the direction of the volatility expansion 80% of the time. Now, this 11th iteration that we're seeing right here is obviously going to be another hit as, well, Bitcoin is moving to the downside alongside the 2-day stochastic oscillator. So that'll go to like 9 out of 11, which is, like 83% or so. But ultimately, we can get some areas of interest to the downside by using the average move and the first standard deviation. Here's the thing. We've already hit the bottom end of the first standard deviation. I think that was like the first sort of hopium target for potentially a low, at least a bounce. And obviously, we've already seen a bounce, but 32% put Bitcoin at about 14.9 or so, which is literally actually the low on CME thus far. And then if we see continuation to new lows below there, again, want to see like at least a medium-term time frame, preferably a higher-term time frame closure below about 16.2 or so for that to be relevant. Then we start to look at the average move, which is about 39.5%, of which that would put Bitcoin, if I can actually get it down there, that would put Bitcoin at around the mid to low 13s. So, quite a big leg down there. Probably not going to happen all in the same like hour or day for that matter, but just kind of in, an area of interest for the next move to the downside. And then if things get particularly nasty, the top end of the first standard deviation is almost 47%, which would put, which would put Bitcoin, closer to about $11,000, maybe even a little bit below $11,000. By the way, we're talking about closing bases. Who knows where fucking wick goes? I have no idea. But here's the thing. Now that we have this signal actually confirmed, this happened basically very early November, we can look at the average days as relevant for kind of timing this sort of a thing. And because that started over here, let me just get this on. There we go. We've already seen about 6 days of this transpire, and that's actually not counting the weekend. So when it opens up for Monday, we'll be on day number 10, basically, or around day number 10. So on average, we expect this signal to take about 3.5 weeks to play out. We've seen a little bit less than half of that time transpire almost already. So it would still be relevant to say that, statistically speaking, risk does remain to the downside. Risk does remain lower. The question is, how low does it go? Well, here's the thing. I do want to address a few pieces of potential comfort, hopium, whatever you want to call it. And I've made some tweets on this as well. I've actually been using Twitter a lot more recently because it's pretty damn fun now that Elon's in charge. But basically, it is this. Just from a sentiment standpoint, we are witnessing extremes. We're witnessing an extreme event. We're witnessing a black swan. I mean, this is quite literally a black fucking swan, right? With FTX going under. I think very few people foresaw this. Myself, definitely, I did not foresee this. And it's quite a surprise and also quite a big deal. We're also witnessing extreme volatility. We're witnessing extreme sentiment. We're witnessing extreme macro conditions. We're witnessing all sorts of extremes. And there's a lot of animosity and question marks within the market right now. So typically around these sort of times, these sort of black swan events, these are the times when lows are more than likely to be put in, timing wise. Now that does not imply price wise. Now time wise, I would say probably before the end of 2023, maybe even the next 2-week stint here. I think maybe even the next week is possible if we get another leg down to one of these major numbers. But with that said, that would, probably be a good indication that at least Bitcoin's going to try for like a major low, maybe even a macro low. That's kind of my thoughts as of right now. What I also wanted to play into this picture is the Dixie chart. So this is also, why I think things are very interesting here. So Dixie, the dollar index, basically the dollar, the dollar versus other fiat currencies, has actually initiated its reversal. Now we've been looking at this one as likely to reverse for the past month and a half. We said that, hey, it's going to take some time, obviously, that this is a weekly top, but very likely looking for big moves down, maybe even as low as like a $1.05 or so, which I think is very likely to hit, maybe even a little bit lower than that. Ultimately, though, Bitcoin has, not benefited from that, while traditional markets have. So what is the differentiating factor here? Well, Bitcoin's black swan event, very likely. So in this case, what does that imply? Well, that implies that if Bitcoin, did not experience this FTX event and all the fallout from it, probably would have had a nice rally, probably would have, been maybe like somewhere between 22 to 23, let's say, $1,000. So all things considered, this sort of an event will inevitably wash by. It's just, a question of how long. And at that point, you probably look for Bitcoin to play a bit of catch up here. So I would be looking at that as a good, a good condition that Bitcoin probably does find its footing at some point. And when it does, it's probably going to rally, relatively hard. Let's say. Now, the monthly here for Dixie, I do want to say that we are starting to hit our first targeted region between about 105 to 106. So I actually would be looking for a bounce on Dixie, coming into this next week or two. That probably doesn't help Bitcoin out, to be fair. That probably doesn't help Bitcoin out. So that could also be another thing kind of playing into what I'm thinking here, that Bitcoin probably has one more leg down, before trying for a major low. But ultimately, after that, I would be looking for Dixie to come even lower, potentially even as low as like a $1.03 to a $1.02. At which point, that's where, if we're going to be looking for higher lows, that'd be a great place for a higher low, I suspect. But for right now, that would again kind of play into the Bitcoin analysis. Other than that, what else did I want to say here as I reference my notes? Yes, so going over to the Krown trading application. We haven't done this in a while, but there's a lot of really interesting things here that really support the case of extremes. One, funding rates. We saw the lowest of the low funding rates, lower than anything that we've seen in like a year or two now, on the FTX event. Now, obviously that's cooling off here, but it is still rather negative. So, shorts are essentially paying, pretty penny in order to keep their positions short. Again, how long can that go on for? It can go on for another week or two, definitely. But at that point, it's really time to start looking for a greater bounce, in my opinion. The exchange's Bitcoin reserve has absolutely fallen off a cliff, as you'd imagine. And the global open interest is going down to levels that we have not seen in years, quite literally. So the market is resetting here. We are getting to extremes. These are quite literally extreme fundamental reads. And on top of that, the leverage ratio, can you actually see it? Let me just double check. Yes, you can. All right, so it's right here next to my rat face. You can see that is actually, coming down significantly as well for the first time in like half a year. So these are really starting to print things that I do think are somewhat comforting for the long term. Again, maybe I'm twisting this into maybe more hopium than it deserves. I don't know. But we are witnessing extremes, and that's the time to probably be looking for a counter movement. And here's the thing, people, generally speaking, a lot of people, what's like the common thing to say on Twitter? What's like the really egotistical thing to say on Twitter? The really egotistical thing to say on Twitter is, everyone's thinking this, so I'm thinking that. And it's like, that is never true, because not everyone thinks the same fucking thing, duh. But this is one of those times where, I don't see anyone calling for like a major low as of right now. Correct me if I'm wrong, but very few people, okay? There's a great imbalance. So if you truly do want to be a contrarian, well, not the worst time to be one, I suspect. And then on top of that, and this next point I'm going to make is like it's a little bit glib. It's a little bit on the nose, and I do apologize. This is not really intended to be directed at anyone in particular, but you probably notice, if you've been around the social media venues, that some of the biggest boolaws, people who are basically bullish the whole way fucking down, after like an 80% move to the downside, are now turning bearish, which is just, I you gotta love markets, man. You gotta love markets. And now they're looking to sell in order to buy back, like, 20 to 30% lower, which is hilarious because that you'd even like tell people that on social media to begin with. Probably doesn't matter too much, but you get my point. And so, we are starting to witness capitulation by some of the biggest laws as far as influencers go, which I think is, very, very interesting and rather telling perhaps as well. Could I be wrong about this? Sure, yeah, but I want to see those levels fail first before that sort of notion is wrong, which would definitely be below about $11,000. Again, on a closing basis, there can be wicks obviously lower. Personally speaking, I still think worst case scenario, like worst case scenario as of right now is maybe like a wick somewhere down around about $9,000 and then close above 11. Something like that would kind of make sense. Anyways, is that a good place for me to be leaving off on a particular video like this? Yeah, probably. Yes, there is one last thing. Also, when we're talking about extreme events, I want to see humongous reads on volume. You very rarely hear me talk about volume because I think in a lot of cases it's kind of a meme. I know people are gonna really fucking hate that statement, but like looking at it on a fucking 1 minute chart, is it that useful? I mean, yeah, sure. Look, if you're making money doing that, great. More power to you. But on the weekly here, we're looking at the highest volume reads on Coinbase, and I believe the index as well. So basically all exchanges ever. We expect, climaxes like this on extreme lows. When was the last time we saw something like this? That was back on over here on the summer lows of last year in May. When was the time before that? That was in March 2020 off the Rona dump. When was the time before that? Over on this major high and over on this major low and over on this major high. You get my point essentially in the sense that we're starting to see a lot of things that do suggest that things are getting, a little bit overdone here. So if I had to call things right now, I think probably one more leg lower. We've already kind of gone over relevant targets for that, and then I'd be interested to see if there's any sort of bounce activity from there, and then come back to it after that. As far as my own dealings, I've been pretty vocal about that. I don't know where things are going to fucking bottom at the end of the day, so that's why when things get down to major areas for me, I'm happy to put in a little bit of like my intended equity. I did the same thing at like $20,000. Obviously, that did not work out. In this case, the next one, are those next areas of interest. I want to reserve obviously 30% of my intended equity, just in general as dry powder. But the rest of it, that's, these are the times when, if I'm thinking long term, like 10 plus years, 20 plus years, I'm interested in potentially, putting some in, I suppose, for better or worse. Anyways, what else? I think that's a good place to leave it off. Yes, now that there's a lot of question marks with exchanges, I think it's relevant to say that, hey, despite having a referral link to Bybit in the description below, of which they have, some pretty insane promotions going on, which I don't know, maybe it's like a red flag in and of itself. I do want to say that if that does concern you, which, obviously we're all responsible for ourselves, understand that I know that Bybit for sure, they've told me, their representative has told me, because I've asked about this, they are in the process of putting together a Merkle tree analysis for proof of funds, and they will have that done as soon as possible. So, if you are a little bit more risk averse, then waiting for something like that is probably the right thing to be doing. And then at the end of the day, do your due diligence. For myself, it makes sense. This is what leverage was designed for. It's like, don't have all your fucking funds on exchanges to begin with. Like, there's no need to. You can use leverage to make up for the discrepancy there in order to cover yourself if need be, if you even want to trade to begin with at all. But Bybit actually does, have some good promotions going on right now. 0% on maker fees for derivative and spot orders. And then, of course, they have that $30,000 deposit bonus. Now, there's some fine writing with that. Obviously, it's based off your trading volume and how much you deposit. But, they want people on their exchange. And, well, I suspect that I'll let you make the decision for yourself. All right, sweet. That's a good place to be leaving it off. Take care, much love, and see you hopefully soon.